gets me every time because it's 2 p.m. on a Wednesday and you're right here watching the Community Rip Live. It's your boy Bags with Gautam and Nick, JFDI, and G Paiza. Hey, boys.
What's happening?
I just thought of something really clever to start this show. As we were getting ready to start, GP said something that I'm going to get into, but GP wouldn't do anything for love, but he won't do that on I hate this market. That's a direct quote from your boy Gautam there. GP, please expand on that.
Oh, Ben, you're such a hot patootie. It's it's a market that's grinding, right? it's not going. There's a rotation of maybe a handful of stocks every day that run up. Today happens to be biotech and half the mega caps. We've talked about this before. All the mega caps cannot run at the same time. It is physically impossible for them to run together. So today it's Tesla and Apple that are doing crap, and that's been the case for a while. But check out biotech. Biotech is churning higher. It's one after the other. It's breaking out XBI. So the that's a solid breakout from XBI. But why I hate this market is not because the equities are not doing well, but we've been talking about for this last couple of weeks. It's quite toxic price action in terms of design to fail, but then rip the other way, right? Like, so I'll give you an example why. And this has been happening a lot more recently than it has in the past. Is like if you look at Moderna, I think we talked about Moderna last week. I'm not sure, but Moderna is a position I took because it closed over the pivot, and then on Friday, immediately on Monday, it could not stop selling, right? And it closed below the pivot, right? It had the doji, closed below the pivot, and then boom, puts in an 11% candle the next day. Stops me out because I'm taking an entry that's tight to the stop, right? I could have had a wider stop and I'd be okay. But to me, that pivot was really important. It's a base it should hold. It shouldn't break down literally the next day. So technically, it's a harder market than I've experienced in a really long time, just overall. If you're trying to trade it, right? And if you're investing, you're fine. Like, there's nothing to worry about at this point. Even there are still warning signs, but nothing crazy to say, let me take a decent short here. There are warning signs that are setting up, like the reversal today. But it's constant, almost in every stock. It'll pop in the morning. Like, look at HIMS today, right? HIMS says they're going to expand out to Canada. Huge move, I think 8% higher. And then literally intraday, I don't know what happens. It completely reverses the entire move. We have a 10% reversal, and that's basically, I guess, to stop people out, and then boom, the other way. This has been happening intraday a lot. So that's why I hate this market. This is a lot more than I've seen in the past. And maybe you guys, obviously, Ben, you're not as intraday or paying attention as much, but Nick, you're in front of the computer a lot more and watching this price action. What do you guys think?
Nick, you're a bull.
Yeah,
you're saying bullish forever earlier. What's do you think this is a toxic market?
I think the intraday volatility has been wild, and I think it's for the day traders out there. I think it's been phenomenal action, and I think what you're not really getting and seeing is follow through to the downside. So, for instance, like I don't know, just pull up anything that was kind of like weak. You'll see that
Apple.
That hard.
Apple.
Sure, you see that.
While you're looking at that, Nick, real quick, just the one thing that I just try to keep in mind is, even though the indices have been breaking out, there are a lot of stocks since our gap up in May, like May 11th or 13th, that have pretty much done this.
Yeah.
So, sorry.
It seems to be like you're getting these shakes, and I think where the indices have been pushing towards all-time highs, we've kind of talked about this for the last several weeks now. Like, as we pushed into highs, what was the action going to be like? And you're again, like I'm not seeing the follow through to the downside. You're being rewarded for either adding into weakness or buying like a retest of the lows. So like if you pull up like a 10-minute chart of probably almost any any ticker out there.
How about a 15-minute?
Sure.
There you go. There's Apple again.
If that's the 15-minute and you were just looking at it, you'd be looking at that sideways action towards the lows there as almost a bear flag.
Mm-hmm.
In a weak tape, you'd be anticipating follow through to the downside, and you're not getting that. So it seems to me like we're getting these perpetual shakes before we rip higher. And the other thing I was going to say was that I think that whether you agreed or wanted the bill, big, beautiful fucking bill to pass, I think that was another like area or like a piece of uncertainty that once that was out of the way, market participants can now kind of shift gears and put their money where they want.
That's an interesting thought. I think that does clear some policy up, right? Because it was a huge bill. There was all kinds of things in there. But one of them was all the defense spending, right? There's another $150 billion that has to be spent this year on defense. So is that bullish for the likes of LMT and LHX, which I just went long on Monday? I think it is.
Take a look at RTX and HWM, both putting in 3-week tight at the highs. Both look ready for a continuation. I was also going to like touch on energy too. Like, I mean, we saw the energy names like
before you touch on energy, I have a question for you. Have you been noticing that these setups, these bullish Can Slim, William O'Neill setups, these 3-week tights, these at all-time highs, at 52-week highs, have you actually found them following through on an overall basis? Because I haven't, but I'm curious if you're
as of recently. No,
expansive. I haven't heard of half the names you always talk about. So
if you're looking for an area to either add or leg in, the 3-week tight pattern is typically not something where if you don't have an existing position on, are you looking to get involved? Because likely, I mean, a lot of times you'll see the low or that kind of gets shaken out before it pops higher.
It's not the place to start, what you're saying.
No, the 3-week tight pattern is generally like a continuation pattern and where you're looking to add. I use the term pretty loosely.
Move, what's that? It's only about a 5% move. After a 3-week tight on average, it's only about a lot of people are expecting these like 30-40% moves. 3-week tights is a continuation pattern for 5 on average 5%. Sorry, go ahead.
Oh no, I was just that. Yeah, to your point, I was going to say like it's a continuation pattern. It's not. I use the term pretty loosely, and a lot of the patterns I'm looking for, I would prefer to see set up on the weekly versus the daily. I think it's a little bit more of a clear picture, and I think a lot of FinTwit is looking for like these picture perfect fucking like flat, like high tight flags. They want it to be like, I don't know, just super pretty. And I think the 3-week tight or just looking and focusing on tight weekly closes, I don't know, kind of get you away from like, it's a napkin technician drawing.
Yeah.
GP, I saw you posted a chart on United Health. And I bring United Health up because healthcare was also that was touched in this giant bill. And it could be some headwinds early on with the companies losing some of this funding from Medicare and Medicaid. But further out, it could be members back in network. But you had an interesting thought on United Health.
There's like you can look at this chart on multiple time frames, and to me, like outside of being cheapest it's ever been, right, which is usually a value trap for the most part, and a ton of buyers came in at that low, right, that 240, 250
Yep.
level, or a seller stop, one or the other. Sorry. It has what you would have expected in this return is a proper mean reversion bounce, right? Like, okay, this is down 400 points in 2 months, 3 months. You would expect it to tag that and do about a 50% retrace. We haven't seen that. We've now rejected the gap fill a couple of times. So maybe I'm wrong and I'm fine. I got no position. I want to get into a position into this. So I'm looking for the secondary flush, which usually happens in these moments where you come back, tag the low, undercut it, stop out everyone who said this is a valuation, not a trap, but this is a great buy, etc. Stop out all those people, frustrate them, reach for their bank accounts, don't have any more money left, whatever it is, to buy the next dip. And I would like to see this come back, tag that 200 SMA, that rising 200 SMA on the monthly, I believe, which is also the COVID kind of bottom area, right? So like that's so close. And look at that monthly, right? If you were like, hey, this is really bullish, let me buy this, where are your buyers? Right? Like it's not there. You have the moving averages kind of curling down. I honestly think this goes lower. This is not a valuation conversation. If you argue with me about it's cheap, I'm just saying it can get cheaper. That's it, right? And I would like to buy it there, but I'm not going to buy it here in no man's land. And I rather either it breaks out of this pattern and I buy on strength, or I buy the weakness that I'm expecting. Those are the two options for me. They're this muddy middle is it's crying out loud about there's no direction.
The other thing was energy. Nick, I think you started to originally go toward energy when we started this conversation about this big, beautiful bill. I mean, I kind of like some of the energy names. As we know from the past, I have terrible luck picking energy names, but I'll look at something like EOG or Schlumberger, the old SLB. Nick, are you playing any of these?
No, not currently. I was kind of trolling MBG and Duzio because I just think both the XLE and the biotech XBI IBB more or less look very similar. And I just
wait. Can you expand on that? Because I don't see what you're talking about.
Sure. So pull up the XLE. You got a big, yeah. Pull up the weekly.
You got it.
You got a massive base. Still haven't gotten the, again, continuation to the downside. Sure, you could argue distribution, I guess, if that's what you're looking for. Pull up the XBI or the IBB, either one, on the weekly.
It's on the weekly.
It's a very similar like range, flat looking base. So I don't think that there's I think the bases look very similar to me. I don't see why they can't move together, why they both can't. I don't know. Why can't they can both continue higher?
Well,
I just don't on a whole nother level, like I don't if we're talking about hyperinflation, we're talking about all, global crisis, I don't see how energy doesn't continue higher either. If they want to eventually push us into solar, electricity, and all this other shit, green energy, this and that, like they have to.
That is not happening with this bill. All those subsidies are gone.
Right.
Yeah, and they're gone in 3 months. Right? They didn't even give it till the end of the year like they normally do.
So I don't know. Like from like a change standpoint, I think that's bullish on energy. I don't know, just my thought. I think Hess was one of the ones I liked a lot just from watching him yesterday. Hess, I can't remember what the other ones were, but
mean reversion bounce is my thought process. Look at do me a favor while you're talking about energy, just throw up Occidental, OXY.
Oh, I know that ticker.
Oh yeah, this is the Buffett's gonna save us ticker. Go to the the quarterly.
Yep.
Right, like we value Warren Buffett as one of the best value buyers in this business, right? For his longevity, for his ability to find the right proposition for his investment cycle, right? So this is why I choose Occidental as kind of a you can go across the board, but Occidental is in a what is that 15-year down cycle, 16-year down cycle. It hasn't made a higher high since
2016.
2011?
Yeah, 2011. You're right. 2011.
Yeah, it hasn't made a higher high since 2011. This is while oil stood well above the 70, 80 mark, right? That most companies are insanely profitable, I think, above 70 on oil. And anything above that is just exponential, right? And we were in the 90s to 100 for a while, and this company is doing this. So to me, it still feels like distribution, and until we see the last kind of the XLE ETF is owned, basically 50% of the XLE is two stocks. It's XOM and CVX, I believe, Chevron.
Yeah.
That's correct.
So XLE is a little tainted in terms of price discovery and action. These are, to me, it looks like distribution cycle on XLE, waiting for these to, and you saw Exxon warned, right? Profit loss because of, it was earlier this week or the weekend. So yeah, but on the flip side, XBI looks like a 10-year base, right? It looks like it's the Hillary base, right? Let's call it the pantsuit nation base. What do we want to call it? So this XBI to me looks insanely more powerful than XLE.
That I would definitely agree with that.
Yeah,
for sure.
And you're looking at a administration that's in a deregulative cycle. You're looking at, like, a lot of people are fighting this, but
somebody once told me Head and Shoulders is a topping pattern. I don't remember who that was.
Yeah, and what's a failed Head and Shoulders?
It's a failed Head and Shoulders.
It's a continuation pattern, right? Yeah. So I really like XPI here. It's been basing for a long time, and what you're seeing is the price action underneath, right? Like even Moderna, that is shitbox central, had an 11% day. So they're popping these one by one. Take a look at RBRK, look at BBIO, look at Gilead, which is also in a monster 11-year base. When
the
Gilead goes, it's going to false break out. Sure. That's the first thing Gilead's going to do. It's going to break out and immediately fail. And when it fails, we pick up the ashes, right? So, but that's a monster base. Amgen, ABBV, go through the sectors, guys. It's like
Pfizer.
Yeah.
No, not Pfizer. Not BMS, not Beam, not a lot of names, because biotech's very stock picker central, but there's a lot to like without the actual index breaking out to the upside, which is just starting.
So
I hope they both go, but Nick, we don't rotate all sectors at all times. There's always a weak sector somewhere. The money's got to come from somewhere.
You know what's
I kind of felt like RFK was going to be just a distraction from what was coming in the XBI, IBB. I don't know.
One of my friends is a farm D, and he's soon to be starting a new position, and he's like, you really think like biotech's gonna go? I'm like, they're the base that's forming, the springs that have been set up. There's not a single soul that believes XBI will actually, maybe Duzio, but there's not a single soul that XBI is actually going to have a monster breakout. But then again, no one thought Kathy with ARC K was going to have a big breakout, and my lady has crushed it, and Tesla hasn't even participated. So you got to take that with a grain of salt.
Yeah, the Kathy names look great.
I think there are some names, especially in the defensive sector, that I probably like more than anything that we've touched on here. GP, I just got to say, we got to just get some gush, right? That's what Nick keeps telling us. All these years later, just get you some gush and everything will be all right.
Hey, even if I'm your
advice,
even if I'm your contrarian indicator, I'm still making you money. You know, just take it how you will.
That's right. Go the other way. You're still getting alpha, right, Nick?
For sure.
There are
what defense names are you talking about?
There are some names out there who are performing that, in general, it continues to push this AI narrative. I mean, I think we've talked before about Big Bear, right? We've talked about Palantir, which is also in defense. We've continually talked about the chips, right? And it's hard for me. We're looking at Big Bear here, but it's hard for me to ignore what powers it all. And GP's heard me say this 100 times if he's heard me say it once, is you don't go gold mining without your picks and shovels, right? And what is the picks and shovels? It's the semiconductors. So when I look at a Broadcom, I look at an NVIDIA, and they still seem to be doing their thing. I'm a little less skeptical about big cap tech. I know I keep bringing us back to big cap tech and semiconductors, but it's what's working, right?
Yeah.
Right? It's still working.
There's a lot more working though, Ben, right? Like I would say today, like there's more days where the other stuff is working than when big cap is working, right? Big cap.
I'm not saying big cap is the only thing that's working. I'm saying it just continues to work.
It's what's taking the indices higher, right? Like, but the names that are working are still our beautiful shitco summer, right? Like, it's
SoFi.
So fine. But it's not just SoFi. There's so many names, right? Like, look, HIMS got destroyed for 37%, and literally, I think it has not seen another low since. FSLR, it's also not a big cap. I think it's sub 10 billion. Got destroyed. We talked about this for weeks, right? And things are participating that haven't participated before. If you would have, Nick, the question I have for you is this the reaction you would have seen in FSLR if energy was going to outperform, right? Like that's my back of the mind conversations as well. Like I would have, like FSLR already got destroyed into this bill, and now that the bill has happened, it's now projecting to the upside, right? All their subsidies, all their credits, everything's going away, and the only thing that people can do now is buy it, right? So to me, the stronghold of energy, maybe it goes alternate, and maybe it just rechanges to like nuclear reactors and solar, especially in the AI age.
Like JEV, Oklo, SMR, NNE.
Yep.
I mean, JEV definitely a leader. I can't remember any of the other ones I was looking at, but yeah, I mean, for solar, I think it's just it's probably just not the easiest name to trade. Just kind of looking at it.
It's miserable.
Yeah, you know, like it. As far as like the price action, it just needs to tighten up. Um, you know, if it pushed up towards near 200, and you know, you got kind of like a, you know, like one of Minervini's like volatility contraction pattern, something like that, and sets up, you know, for the longer term investor. I mean, maybe it might be easier to just throw on a position and hold it, but yeah, I guess, yeah, to your point, I think you would have seen FSLR just get absolutely obliterated. What are the rest? Isn't AARY, is NXT solar?
Dude, Sedge, right? End phase. Look at all these names already got
Yeah,
destroyed into the bill, right? So it was sell the rumor, buy the news type reactions here, right? They were already anticipating this big beautiful bill would get passed, and and they've been
yeah.
selling
I like,
for a part of a year.
yeah, BE was one that was mentioned today. Definitely a standout. I mean, looking at some of the solars, their RS rating on MarketSmith are all actually pretty high, from Sedgy, Jinko, CSIQ.
Well,
Yeah,
look at Tan.
maybe you got something there.
If you want to look up like solar in general, Tan just got a monthly MACD cross. It's the first one in 4 years. First one in 4 years. That's how long this down cycle has been in solar, right? So,
Yeah,
yeah, but if you can pull up Tan,
TAM.
yeah, to the monthly,
and
if you can throw up the MACD,
not M.
In.
Tan, yeah. Right, it's still in a tremendous down cycle, so there'll be bips and bops, and it's going to struggle here and there, but the overall underlying theme is that this is bottomed and this is ready to go, and it's lined up like near exact to the big beautiful bill. So this is the one that, like, if XLE was going to outperform or perform the same way, I wouldn't have expected to see this in solar, right? Or in alternative
Sure.
energy in general. So 10 on the monthly. Can you go to the monthly, Ben?
Sure.
Yeah. So you see, like, that's the first cross since 2000, cross up since 2017 on the MACD. Might be even longer than 4 years.
April 2017.
Yeah. So it's been nearly 8 years since it's been in no, sorry, not 2019, right? Is that the first last cross where it dipped a little bit? Anyway, my whole point was that this is a sector to keep your eye on, right? So give me every opportunity to buy FSLR in the 130s again. I'll take it every time.
I would say yes, GP. 2019 is accurate, but I would give more precedence to that 2017, right? Because you're more underwater, right? You're below equilibrium there.
And that's the thing. Just because the MACD is crossed, it's not bullish until it takes out the zero line, right? And that's when it's like when the trend smooths out instead of the volatility. Once it gets back above the zero line, it starts to then trend in a more reasonable fashion versus 10% moves down, up and down.
But you can't wait, GP. Here's the thing, right? You have, if you're, in my opinion, if you have conviction, you can't wait till the monthly MACD crosses over, because then you've missed a lot of the move. Yeah, you've got confirmation now, right? But you at least need to have a starter going on if this is something that you believe in.
Yeah. But how much of the move have you missed, right? And let's say if you just bought 10, how much of the move have you really missed? You just didn't catch the bottom. If this is a long uptrend move, right? Let's say it goes back to all-time highs for TAN, or even the recent highs, 115. Even if you bought it here at 38.61 today, you have a 200% move in an index.
Well, I would say losing it out on close to 70% to get it back above the line is probably significant. Yeah, it went up a total of 558%, but I love 70% trades.
Yeah. It all really depends on what your goal is, right? Like, are you trying to not get shaken out and beat up? Because even though the end result is a 70% move, there's been a lot of beatdowns in between, right?
Right.
So it's just about how you want to invest, right? Like it went from
Yeah.
25 all the way to 35, and then 35 all the way to 29 again, right? That's not fun to hold on to get to 70% either.
Yeah, but
Would you?
I'm not saying you're all in while it's underwater, right? But I think
Yeah.
you need to have a starter before. If again, if your conviction is high, you need to already be in. You don't need to wait for the breakout, or you probably should be in if you have high conviction. No,
Yeah.
Why not?
I had high conviction in FSLR, and it sucks to have bought it in the 140s last year and then having to rebuy it in the 130s this year. Yes, that sucks. But it was a point that I wanted to buy. We talked about this, right? It's a really, if you guys ever get a chance, it's a really quick, easy read. It's called The Art of Execution. Common King Kyle recommended it a few years ago. Read it, amazing read. Um, Go out and read it. I think it's. I don't read a lot of trading books. I rather get um, I rather get real time learning, but it's one of those things that it was just so simply said that it made too much sense, right? And so sometimes you just need to hear it. It's like if you're the one of the points is if you're down 50, 60% on a position, right? You're an investor, you're down 50, 60%. If you're not selling and if you're not buying, then what the hell are you doing? And his response was, you're praying, right? Praying that it goes up, praying goes down. So you don't have conviction, get out, sell it, or buy more. Anyway, it's a really good read. I think Ben, you read it as well, right? So
yep, I did. What it really? Yes, you're exactly right on the conviction piece. If you're not buying, you should be selling. That's absolutely right. What it really, what the book really gave me, and I want to turn this into a book report, was fewer names. Right. When you're too diversified, which I feel like most of us, a lot of us are, you're basically at market risk. Right. And if you are in fewer names, it's basically single company risk. And if you are in high conviction, best of breed names, sure, there are going to be down days, down weeks, down quarters. But over the course of time, this is why I keep hammering mega cap tech. Over the course of time, they go up. And there is no better problem child of that than remember the horrendous time Meta had all 22, right?
yeah.
And
Do you
where
remember
did it
when
end up
Meta
going?
was?
If you had bought the highs in 22, you would be up 100% on that trade at this point in time. Now, would it have been miserable to hold that? Absolutely. And I'm not saying anybody should have done that. But this is a perfect illustration of, you're at single stock risk or single company risk and not market wide risk.
Yeah. Do
Anyway,
you do you remember? So Meta is a really good example of valuation when we were talking in relationship to UNH, right? When Meta hit 150, I think it was like 140, 150 price tag back in 2022, the valuation was insanely cheap on Meta. It was nuts, right? I think it was trading at like I think 8 or 9 PE or something like that, and it got cut in half. Maybe I got the PE numbers wrong, but then it got cut in half after that, right? And the PE went down even worse. And yeah, you'll argue that it was a different time period because the markets were in a bear market, but stock reactions are stock reactions. So just keep that in mind when you're talking about UNH. Valuations can get cheaper.
Nicholas,
Yes, sir.
you said you were loving the market earlier, and we were starting to touch on why you don't think this market is toxic. Give us some names that you like and why you like them and why they could lead us a little bit higher or a lot higher across the market.
I mean, I wouldn't call them market leaders per se, but I think BYD and DraftKings are probably my two favorite at the moment. BYD broke out. Yeah, BYD broke out of a pretty big base, and it's just starting to see some follow through. DraftKings I liked because it appears to have bottomed out on this most recent pull in.
You know, it looks great.
Tell us, GP.
Yeah.
MicroStrategy.
Oh God, it does. I agree.
MicroStrategy. Coin is already beasted, but MicroStrategy looks great. You know what looks great and then fails every single bullish pattern? Tesla. Had a 3-week spike, failed. Had a flag, failed. Had a pennant, failed. It keeps failing, yet technically it's really bullish. It's this odd scenario that's going on right now. Anyway, we can talk about Tesla a little bit later if we want to, but
no, we can jump in on Tesla now. It's right now under the pivot that we drew. Oh, I don't know how many weeks ago is that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 weeks ago. So better part of 2 months ago. This was the pivot that we had it on. It's actually sitting just above it right now.
Yeah.
How are you both feeling? I know you both have loved this one in the past.
I still love it, right? And Nick, I'll let you go in a second. But from a technical perspective, right? People are like, well, it's not technically bullish. On a weekly, it's got a golden cross. On a daily, it's got a golden cross. On a monthly, it's got a MACD cross. On a quarterly, it's got a MACD cross. It is sitting at a 4-year pivot of 293. It's the high that we hit post S&P, I believe, in 2020 or 2021. It's in a monster base. You have all your weekly moving averages aligned in the right place. The 100-week crossed the 200-week a couple of weeks ago. Yet price action is terrible. But the one thing I will tell you is every single Tesla event has resulted in great price action. Every single Elon tweet has resulted in the shitbox that is the stock right now, right? So if you, and I'll go back, right? The earnings in April were one of the worst earnings I've ever seen from Tesla in the history that I've been owning it. Like literally, I was like, what the, right? And I was like, yep, this is going back to 100 with those earnings. And the reaction was, let's gap it up and go, right? When the tariff news came out, it was one of the best performers, right? Tariff news is a fundamental part of Tesla's like supply chain, right? So had a 22% day followed by another 22% day. It's when it's been business related, and then recently robo taxis, green day, deliveries, green day. Elon tweets about Trump, we're down 30%. That's just what happens. It's just literally what's been going on. So I really like the structure and setup to Tesla. And that being said, every time I like Tesla, it fails. Every time it looks like it's going to fail, it rises. So it's, you buy Tesla when it looks like death, not when it looks like it's golden. Okay, I'm done.
Yeah, I mean, again, kind of to last week, it just kind of looks like a base on base. And if you look, I mean, as it's kind of rolling over here, despite kind of appearing to hang by a thread, the volume's declining on this move down as it kind of retests that kind of like, recent low. I think if you're going to be trading Tesla, I think you know what you're getting into. Like,
wait till after earnings now. Like, it's probably just going to go sideways. But right? Like it's all the like the CEO of Twitter resigned, Linda Y, right, today, and so Tesla goes down. Like nothing to actually do with Tesla, but it's everything else to bring it down. And on the same time, this I hate Elon and I'm going to short Tesla stock narrative is not happening in the private markets. It's not happening in the private markets. They just valued SpaceX at $400 billion, a 15% upside from 7 months ago, 8 months ago. So someone's lying.
I'm completely content to sell covered calls on Tesla. Completely content. It's the easiest money I've made. It's the easiest money I've ever made.
It will not be anytime soon.
Well, we've gone over this the previous couple of weeks, but I sold a bunch of covered calls over the last month, and some of them are wrong, some of them are on the money. And Tesla by far brought in the most premium. Was the easiest thing I could have done. So I'm content to just rinse and repeat for now. I think we've got 3 more weeks before earnings. Earnings season is
10 days. 10 days.
10 days, 2 weeks for earnings to creep upon us. So I probably won't be taking these same calls forward into August, but I am happy to let them expire next week.
Yeah, you probably have until the best is probably the earnings ones, right? Because they hold a lot of premium and they'll decay because Tesla's not going anywhere for the next 10 days. You'll get some of the best decay there and just close it before earnings.
Yes, sir. One question that we got from one of our good friends was how we decide to play options in a market like this. And I'm not an everyday trader. I'll throw a trade on occasionally, but what I try to do is see where the chart's at and what do I think is a fair value for me to sell out of this stock. And I'm content with pulling that premium down. So it's not too scientific, right? I try to, get the implied volatility out of it as much as I can and squeeze every penny that I can out of those moves. But at the end of the day, I'm just collecting cash coming into me. And if I get called away, hopefully it's around the strike. And I was okay with letting that position go. I try not to do that too often with positions I want to keep. But interesting on how you guys either sell to get long or sell covered calls to maybe scale out of a position or just collect premium.
I do not trade options, so GP.
So for me, implied volatility has to be high. I'm not going to be selling calls or selling puts if the IV is not inflated, right? Like the risks are one of the ones that when in April, if you sold 2 week out Q350 puts, you were getting nearly 8% return in 2 weeks. That is like a no-brainer stuff to me. So when it comes to options like premium selling, I don't like doing the covered call. It's a super active management strategy. And you got to kind of be paying attention. I like doing the selling of premium against positions on a big move, right? Like, so the one, like when Tesla had its 2000% move back in 2020, I'm giving you one example. There's other examples, but one example, you could have bought 1 year out and you were getting I think 30% return or something like that for selling the calls out, and you still had another like 20% upside. I'm like, yeah, no brainer, right? That to me is a no brainer because the decay over that time, it'll contract in volatility. Makes sense. So I don't do a lot of short term stuff when it comes to premium selling.
So I sold my Tesla 718 380 call for $8.29. It's currently trading at 11 cents.
Perfect. You should
close it.
Why aren't you covering that?
Why am I closing it?
Yeah,
I am closing it.
Okay, I was like, to me, anytime a covered call strategy gets to about 8%, 80% of its value, I'm out. I'm not for 20%. I'm not risking it to close lower. Some after-hour news comes out. Anything can happen. It has happened.
It's closed. I just
Okay.
closed it.
Good job.
Anyway, but those are the ones that I love, right? That was $800 just straight to me, just for holding the common shares, and that's the benefit of having a large stack of common shares. One thing I've been doing more often is trading around my SOXL position. As you guys know, back during Liberation Day, Tariff Mageddon, I was buying SOXL in the $8, $9, $10, and I loved it. Now it's closer to 25, I think. So what I'm doing is just churning that now, right? I'm just churning it up, just turning it over. And while, yes, I don't want my positions to be sold off, it's a nice little weekly wage that I'm getting for basically going up a couple bucks on my strike and just starting that Monday and just selling it. And if I get called away, I get called away. It's a trading position anyway. Yeah. So it's taking the premium, and the best thing is when it closes, like I said earlier, right near just above the strike price, right? Because then I'm selling, and I collected the premium off selling, and it's like a double dip. So I enjoy it. It's not rocket science, but this episode has flown by. We only got like 12 minutes left. We haven't even shouted out the community. Where's Randy? Randy's not up in here. Hey, Randy, where are you at? Anybody got any chart requests or things that you guys want us to break down or look at? I saw Big Bear AI in there, and I know I flashed the chart up earlier. But Nick, you want to take a stab at Big Bear?
I like it. I don't have it on currently.
Where would you look to get active?
At this point, you're either waiting for the moving average to catch up, price to kind of tighten up right here, kind of a high tide flag, or just some tighter price action. I mean, your entry was down there, where the moving average recoiled. But they're all trending in the direction you want to see. So you could probably throw some fibs up if you wanted, whatever your kind of entry strategy is to kind of nitpick your entry. But this is kind of another one of those shitco names where it's like, once we see, depending on the day, if the momentum's there, it's going to rip. If the momentum's not there, then, it's not. But it kind of looks like a little bit of a base too. So I think, what is that? 1050. Once price kind of clears that, you're probably sitting a little bit better than where it's at right now. But yeah, I like it.
Yeah. And if you get a chance.
Oh, there's Randy.
Hey, Randall. Welcome back to the chat. GP, you got a name you want to look at or care about?
So I like SMCI.
Ooh.
We've talked about this during Shitco Summer.
Yeah. So this looks phenomenal to me. I'm just waiting, like I am with so many things, just waiting for this. And the thing that's happening with me with this is the longer I wait and the higher the market pushes, the less likely I'll be able to hold, which has been the dynamic that I'm trying to work through and figure out, because like these things not participating while the market pushes higher always concerns me, because when the market pushes lower, it all gets pushed lower, right? So not breaking out of this 48 pivot, which I think is a really important level. But it's been holding. It's putting in almost a 3-week tight, Nick. And so I like it a lot, but the overall market structure and our typical seasonality of let's die into end of July into beginning of August, that's happened 17 years in a row or something like that. I'm not even joking. Like, you think it's now? It happened in 2015. Do you remember the China trade, the currency crisis? Same thing. We dropped right around there. But so I'm having tight stops on a lot of stuff, but I really like SMCI.
Speaking of the China trade, we got to revisit BABA. being
awful.
so
take a look at
being so bullish on it. I mean, that's a complete failure there. I was looking at this chart earlier. GP, are you still here? Are you still looking at this?
Yeah, I still like it because the failure is on really like zero selling, right? It's just there's like no good news. In the absence of good news, it behaves like Tesla. It just goes down, right? It's a trading style. There is literally no volume. There is nothing to suggest that there's something fundamentally wrong here. Yet it just keeps declining.
So you're still holding. So you're still a believer. Is this going to V out and you turn?
I don't know, man. I don't know what's wrong with. It goes back to our conversation I think a couple of years ago. China is just not a fun place to invest in.
It's not.
Yeah, it's like this is just not worth the mayhem. Like I get my ass handed to me by Tesla every other day, so I don't need it to hand to me twice by Tesla and Baba. Anyway,
Duzio wanted us to look at Mobileye.
But if you're looking at a China name, you gotta have FUTU on your list. Futu looks phenomenal, right? So it's not all China that's breaking down. This looks like it's about to break out.
Jack Ma was seen with Xi Jinping recently, so I'm not sure Bob is dead. Duzio want us to look at Mobileye because he thinks that's trolling me. It's actually not, Duzio. It's a profitable trade. And I would be looking to pick some up somewhere in the 16s if we got it. I'd trade it again. But that's a failure. This is what we saw on Apple earlier, right? This was Monday's Apple chart right here. So I think you can look for a redo, but I have no interest in Mobileye currently.
No.
Too many good semicons out there. I mean, I would go with SMCI as a long before I went with Mobileye.
Yeah. Or you can take on Intel, or you can take on GFS. They are in the same, like Intel has a ton of accumulation. We talked about it a few weeks ago.
Yep.
This is your better bet, in my opinion, than Mobileye. GFS also, Global Foundry. We're talking about bringing chip manufacturing back to the U.S. These are big winners ultimately. You don't wait to build the factory for the stock to run up. The stock runs up into the factory builds.
Investors hate that investment year, don't they?
Yeah. So, Mobileye, is it worth it? If you want to, there are better names not to get punched in the face on a daily basis with, and Mobileye might be worth it in the future, but right now it's a nightmare.
Hey, Nick, I see you posting Win. I just pulled up the chart.
Oh, yeah.
What is about the gambling names that you're liking? Why now in July?
I mean, I'm on Howard's like rise of just all things degenerate, and like with how I love how DraftKings look. I didn't catch Win; it just popped up on my like kind of master list. I don't know. I think that's kind of where we're at. We're junkies.
We're all degens.
Yeah. But see,
for sure.
So no offense to Howard or you to Nick, but like if the only reason we're rising is because it's degenerate, it puts an underlying negative spin to the markets. This market, yeah. Sorry,
I think we're.
No, go with that, GP. Go with that.
Yeah, for sure. Because I think we're setting up to go like.
The only way you can succeed in this market is if you gamble, and that's complete and utter bullshit. So, in my opinion, of course, like okay, those names are working right now, but dude, the names have been working for a long time, and they're not in the degenerate economy. Meta, Apple, Tesla. You're talking about Amazon, Nvidia, Google. Like we can go through the mega caps, but then we can also go through the non-tech mega caps that have been working for a really long time that don't fall out. Like this is a market that is finally on the verge of having a collective breakout, right?
Yeah.
And so a collective breakout gets undermined when the tone of voice is degeneracy. So I don't personally like that approach.
Yeah, I feel that.
And I'm not criticizing, but I just it lends to the fact that it's just a gambling environment. And yes, there's a lot of crap, and I've talked about toxic price action, but to me it's not degenerate. But yeah.
Yeah, I don't think it's degenerate either. However, I do think we do have a lot of overvalued things in the market, and at some point those. I'm not putting my bear hat on yet. I know I teased with that earlier in the chat, but at some point, some of these things valuations have to reset. I'm not calling any particular stocks out by name, but we know that there's a lot of overvalued pieces, and can they grow in that evaluation over time? Sure, but that doesn't mean that there's not ebbs and flows before that gets fully baked in. Fair?
Yeah. Can you give me an idea of what you think is overvalued?
Palantir is the most overvalued stock in the whole market. That doesn't mean Palantir can't keep going up.
Can you give me a second example? Because I agree with you on Palantir.
Tesla.
Okay.
Tesla's not at all-time highs or anything right now, but I believe Tesla's overvalued.
Yeah, that's the funny part, right? That's we talked about this last week with Tesla, but we won't get into it more, right? While EPS was doubling in 22 and 23, Tesla was getting cut down by 78%, right? So if we're not having the same reaction, the market's expecting the valuation to grow into that expensiveness.
Sure. I mean, 103 forward PE is pricey. That doesn't mean that it can't trade there. As we've said 1,000 times, anything can trade. But at the same time, that's pretty pricey. I mean, when you look at the Qs, for example, the Qs don't trade that high, and the Qs include Tesla.
Yes. You know what's breaking out? SMCI. Sorry.
Love it.
Yeah.
No.
Yes, I'm focused on my portfolio while we're talking about this too.
That's okay. 1 minute to go. Last word. Nick, go.
You're ridiculous.
Shoot, I don't even know. Follow your plan, man. Just stick to your shit. Stay in your lane. Don't eat in your tent.
Patience.
I don't even know where to go with Rufio's comment yet, but that's fantastic. The chat is melting down right now, and we love to see it. I am still a crypto bull. That's my last word. GP.
I got 2 words.
Sancho.
2 words. Patience and Ethereum.
There you go.
Yeah.
Now you're on the train. I love it. All right. Hey,
what about XRP?
XRP from Nick. It's been another exciting episode of the Community Rip here on Stocktwits. Thanks so much for joining. We'll see you next Wednesday, same time, 2 p.m. Eastern. We'll see you then.
We'll be sitting, not standing.